All right. I remember we went through this question last week, Jessica Ventures. Am I right? Is that right?
Yes.
Okay, so how many of us like went back to to try to like solve that question because I remember that was the assignment I gave to every one of you to try to go back and solve the question. How many of you actually did that?
I
I feel
didn't
like a
do
lot of
like
people
that.
did not.
I
I
tried
solved.
doing mine.
I I think I solved it and sent to you and asked some questions.
That's a building, right?
Me, but
Me, but okay, you sent it to me.
yes.
Oh, so sorry. I promise I'm going to like respond to everything tomorrow. Like I mentioned earlier, the week has been so hectic for me. So I'm going to make sure I respond to the both of them tomorrow. Okay. Abiodun, you also sent yours to me, right?
Yes, I did. Then I discovered one question that they didn't put it. I was waiting and I said the second time.
Okay, okay. So we're gonna look at that question too that you sent to me. So I think I checked it and I realized that I think um the are you sure the asset did not start? Well, let's leave that for later so we're not distracted. So I want us to take one more questions today. One more question today, rather. I want us to take one more question today. Munibat, where did you see that question from? Maybe we
Uh,
can even solve
uh,
it
uh,
together.
uh, excuse me, sir. Excuse
All
me,
right.
sir. Please, when I tried solving the same thing, but I had an issue. So
All
I
right.
paused. This, please, can you scroll down to that? Because I had in mind of asking in class
Okay.
today. That question, yes. This date of acquisition
Okay.
for plants, I got confused about between October to May,
All right.
as in the number of months. I felt it wasn't correct the way we solved it in class the other day.
Okay. Let me open the solution that we had in class. Okay. Okay, I'm here now. So with what did we say? We said it was um
You created it. That's what I was trying to ask that question. So, yes.
okay. So we said it was excuse me, let me this is correct. This is correct. Okay. You're talking about this one, right? For plant and machinery.
Yes.
So how many months do you think it is? From October to May or to when? To June, right?
To May, because May is here. To May.
So how many months is that?
I think it was 7 months.
And we use that many months. Let me see the workings now. And we use 9 months, right?
Yes.
That must have been a mistake. Thank you so much for checking. That was why I said everyone should check. That must have been. It was from the class that you could give me this figure too.
So it was when I got there, I had to pause so that I can ask, maybe I'm wrong.
Thank you. Thank you so much. Thank you so much. Thank you. Is this correct? Is it 116 that's supposed to be? Or what did you have? So you talk now. Talk to me. What did you have for yours? Olo, are you there? Who brought up the question? The person is no longer talking.
It's me, sir. Please, just give me a little time. Let me check my notes again.
Okay, okay. Sorry, everyone. We're trying to like trash out something, an error with this.
Yes, sir. Sir, while she checks, I want to ask a
All right,
question.
please go ahead.
Like that PPE, I'm sorry, that plant and machinery result.
Yeah.
So when you look at the basis period um, for that date or for that year, it was 12 months. So I was still asking, is there any need to correct when the basis period is actually 12 months?
Is there a reason to what?
To actually prorate, like the seven months we are not talking about now. But when you check the basis period for that year, which the asset fall into, it is actually 12 months.
Okay, I think we have to go back to our this thing first of all, so that we do not confuse that. We have to go back to our fixed assets um allocation schedule. So we said that this plant and machinery was acquired when. Let me go back to the question. Sorry. The plant and machinery was acquired 1st of October 2005, and do not forget
9 months is correct. The 9 months
the guiding principle
Mm.
for annual allowance is that you cannot enjoy for the month that you did not put the asset to use.
Okay.
Unlike initial allowance that you went, even if it's just 1 month that the asset used in the year, you will still enjoy your full initial allowance. But for annual allowance, right, you can only enjoy for the number of months that the asset used during the year. Now, look at this for instance. It was acquired when 1st of October. Are you getting it now? It was acquired 1st of October. So it means that we started using it 1st of October. So the annual allowance that it will enjoy will be from 1st of October till when? Let me see the asset allocation schedule now. This is it here. From 1st of October to 30th of what? June
Of June.
2006. Are you getting it now? The period end is to every 30th of June,
It's 9
36.
months.
Am I making sense now?
Yes, sir.
So that is the reason why
But
we
what
have
I'm seeing there is first, excuse me, sir. What I'm seeing is 1st of July.
1st of July, where in the question,
Yes.
this is the question.
Where
This
with
is
the
Uh,
page where we are right now? No.
that's
Okay.
the basis period. Okay.
this is the basis period. It's not the period for the asset. This is so this is our allocation schedule. I'm going to share with this with you. Recall. Let's take a
Okay.
let's take a retrospect, please. I said that when you see a capital allowance question, right? Capital allowance is very, very important. And I like to take my time with it so that when you get to advanced taxation, you won't have any issue with it. As a matter of fact, with the way I'm taking you, you can actually go ahead and attempt the question on advanced tax for capital allowance. I promise you, you won't see anything new. By the time we are done, you will not see anything new if you follow the principles that we are following. All right, because I know how important it is rather. So I said that the first thing for a starter, when you see a capital allowance question, right, try as much as possible to do a rough sketch of your allocation schedule so that you can know the accurate period or accurate year of assessment that your asset fell into. By merely looking at this question like this, except that I've been practicing and practicing and I've mastered it, I may not be able to say that this is the year of assessment that this motor vehicle fell into. By just looking at it, this is the year of assessment that this plant and machinery fell into by just looking at the date of acquisition. All right, it is until I draw out the allocation schedule that spells out the basis period, the year of assessment. That will now make me to now say that okay, based on this acquisition date now, this is when or this is the year of assessment that this particular asset falls into. For instance, this guy that was acquired on the 1st of October now, We came here and did the allocation schedule, and we saw that 1st of October is within this period, 1st of July 2005 and 30th of June 2006. It is within this period. Therefore, then, the year of assessment that this period, that this assets falls under is what? 2007. Am I communicating, please? So this is not the period for the assets. This is the basis period for the year of assessment. Okay. Now, in this basis, in this period, now this plant and machinery was actually acquired. But when was it acquired? It was acquired on 1st of October 2005. Now we have to count October, November, December, 3 months. January to 30th of June, how many months? 6 months. So how many months is that in total?
9 months.
9 months. So we were actually correct, right?
Yes.
Okay, I now understand.
Okay. Thank you so much for asking the question. I'll just split my screen the way I normally do so that I won't have to be. Uh, okay, why is not bringing this one up? So that we can have both on the same page. All right. So um, I'll just reverse this back. So this is actually 9, and this is also 9. So we're actually correct. So I'm trying to cross check before I send the final solution to you. Hope there's no mistake with this. Okay, 531 to 50. So with this one now, I'm skeptical. I'm skeptical. 800. So for this plant and machinery, there was something that we did, although it does not affect so much, but we did not compute investment allowance for it. Okay, I think we agreed on not computing investment allowance, right?
Yes.
Eh?
Yes.
Did we agree on not computing investment allowance?
You said the senior lecturer did not take investment
Okay,
allowance.
all right. So for safety, for the sake of it is for this for just to be safe in your exam, when you see something like this, kindly come down and put a note. Put a note for the lecturer. Note that investment allowance was not computed because of the amendment by Finance Act 2022. Is that clear, please? This makes you professional and it makes you to be on the safe side. Once the lecturer sees this, even if they have allocated a mark for investment allowance, they would know that this is the reason why you did not. It's not because you forgot or it's not because you do not know. All right, it is because you can see that ICANN would have incorporated that into their masking scheme, and they have not. Did that make any sense?
Yes, sir.
Yes, sir.
Okay. All right. So please don't forget, and I want you to always, when you make an assumption, always state your assumption immediately after your solution. This is an assumption that investment allowance is not relevant again because of what Finance Act has said, 2022 has said. All right. But because you have made that assumption, your examiner is not there when you are making the assumption. Kindly state the assumption that you have made. Is that clear, please?
Yes, sir.
All right. Thank you. So I want us to answer one more question. Okay, there's a question I saw in your pack in a pack. I want us to answer. Please, can we all see my screen? Let's just answer this question, then we'll move ahead to the other part of the notes. Okay, so a particular question here. Sorry, pardon me, I should have taken to the page before. Okay. All right. Okay, this is the question. Oh, yeah, I just answered the question. No. All right, let's attempt this question, please. Let's attempt this question. Can we all see the question? Number two. Okay, let's attempt number one. Sorry. Oh, it was okay, let's do number two. Sorry. So number two, can we all see the question, please? Can we all see the question?
Yes, sir.
Okay, I'm going to just read out because of time.
Yes, sir.
Manufacturing Company PLC has been in business for several years. Financial statements are made up to June 30 every year. The following acquisitions of property, plant, and machinery were effected in the year ended June 30, 2014. All right. Industrial buildings, 5 million naira. Plant and machineries, plant and machineries, 1.75 million. Motor vehicles, 3.5 million. So let us deal with this guy. I said the following disposals were made during the year. Motor vehicle acquired for 1.5 million naira in the year ended 30th of June 2012 was sold for 2 million naira. The residue of qualifying expenditures as at July 1, 2013 were blah 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 blah. All right. They just say compute the capital allowances for the relevant assessment years. So let's deal with this, please. Let's deal with this. So what is the first thing to do? Osana, what is the first thing to do? Osana, what is the first thing to do? I'm listening to you, Osana.
So the first thing to
What is the first thing to do when you see a question like this? When you see a question on capital allowance, what is the first thing to do?
the first thing is to
Prepare your allocation schedule. So
yes prepare of asset allocation schedule preparation.
factoring company PLC computation computation of capital allowances for the relevant years of assessment. All right. All right, let's just have it like this. Okay. So the first thing to do is, pardon me, our asset allocation schedule. So for our asset allocation schedule, how many columns do we have? Abiodun, for our asset allocation schedule, how many columns do we create?
That should be three.
3 columns. We have our YOA,
Basis period and qualifying
we have,
capital expenditure.
we have our business period, and we have our QCA. All right. Now, they said for the relevant years of assessment, so we have to like figure out what the relevant years of assessment is. So now, they acquired all of these assets were affected in the year ended June 30, 2014. So it actually means that they acquired everything on the same on in the same year, right? June 30, 2014. This is a very simple question now. So in fact, for this question, you actually do not need an allocation schedule because everything were acquired on the same year, right? They were all acquired in the same year. So all you have to do is just to prepare your capital allowance. Do you all get what I'm trying to say? Do you all get what I'm trying to say?
Yes, sir.
So for this particular asset now, they were all acquired but they were all acquired June 30, 2014. All right. And they did not give you like the acquisition date for each of them. So what do we do? Hmm. Sorry, I'm seeing something here. It said motor vehicle acquired for 1.5 million naira in year ended 36 2012 was sold for 2 million naira. Okay, let's go ahead, please. Let's go ahead. So everything was acquired in June 30 to 2014. So it means that you start computing your capital allowance for each of them from June 30, 2014. All right. So what do we do? For our capital allowance, we have the first row, our QC, then we have our initial allowance, we have our okay, sorry, should be here. Oh, my system is happening. Oh, God. We have our QC here. We have our initial allowance. Then we have our annual allowance. All right. Then the first column will be for our business period and all of that. All right. So what are the key C that we have here? We have industrial buildings. Please, I want you to respond, please. We have industrial buildings. We have plant and machinery. Then we have motor vehicles. We have these three assets. Now, then the fourth column will now be for our what? Our capital allowance. All right. Okay,
Market
so
are not sure.
sorry, please, can you mute your mic, please? Except you're talking. So for our for our industrial buildings, can you check the table? What is the rate of our initial allowance, please?
15 and 10.
15. Okay, thank you. For our plant and machinery, what is the rate of our initial annual allowance? 50/25, right? Is that correct? 50/25, right?
Yes.
What about for our motor vehicle?
50, 25.
25. Okay. 50, 25.
Motor vehicle is also 50/25.
Yes, as
Yes, sir.
well.
Okay. All right. Okay. I'm trying to make this one centralized. Okay. Now, so under this now, we now have our costs first of all. If we have our costs, what is the cost of our industrial building? We have 5 billion naira, right? For our plant and machinery, we have what? 1750. And for our motor vehicle, we have 3.5 million. Please allow me to close all of this. I think that is the reason why my Excel is hanging.
It's 3 million.
Please hold on. Let me close all of this Excel that I've opened. Okay. I see that it is faster now. All right. Are we back, please? So sorry about that. Are we all back, please?
Yes, sir.
So sorry, please. So our initial allowance first is the first thing that we're going to calculate. So we said this one is 3 million naira, right? All right. Our initial allowance. Oh, that's fine.
Motor vehicle is 3.5.
Okay. Who now said it is 3 million before? 3.5 million. All right. So our initial allowance from this now. Initial allowance for this one is 15%, right? So 15% of 5 million is what? 15% of my 5 million naira. Please, someone should just compete for us. Just do it here.
50.
I'm 0.15, right?
Yes,
750. Is that correct?
yes,
Yeah,
sir.
this one is 3 times 0.5. This one is 875,000, right? Am I communicating, please?
Yes.
Yes.
And this one is 1750. Now, the annual allowance now. Osana, do we have to prorate the annual allowance now? Osana,
No, sir.
No. Why? Because
They were all
we have not been
acquired.
okay. They were all acquired in the same year, and we are not given the actual acquisition
Yes, acquisition date.
of them. So we assume that they were acquired at the beginning of the year, right?
Yes, sir.
Now, how do we compute our annual allowance? Sorry, if you are not talking, please mute your mic, please, to avoid distraction. How do we compute our annual allowance? Muibat, what's the formula for our annual allowance? Okay, if I call you and you do not respond on time, I'll just go ahead, I'll just recall. Recall that for our annual allowance, we said that annual allowance, in a case where there is no proration, it is equal to what? Our cost minus what? Our initial allowance in the bracket first. Our cost minus our initial allowance divided by number of useful life. This is in the case where the asset actually used the full year in that period. But in the case where the asset did not use the full year in that period, what did I say we'll do? We prorate. And how do we prorate? You simply multiply by x divided by 12. X is the number of months in the year that the asset used. Am I communicating, please? So you simply prorate. But in this case now, the asset is said to have used the entire year. So what will be what formula will be applicable? We will not prorate. So we just say cost minus initial allowance divided by number of useful life. And do not forget our number of useful life. We said to get the fastest way to get your number of useful life is just to say 100% divided by 10% annual rate. All right. For industrial allowance, we'll, s- we'll just say that 100% divided by 10%, that's how many years? 10 years. For this one, we'll say 100% divided by 25%, that's how many years? 4 years. For this one as well, we'll say 100% divided by 25%, that's how many years? Also 4 years. So the fastest way to get the number of years of useful life is just to say the 100% rather divided by the annual allowance rate. Am I communicating, please? So someone should compute the annual allowance for industrial buildings for us here. Oh yeah, oh yeah, oh yeah.
What to five?
Yeah?
What to 5,000?
4 to 5,000. Is that correct? 4 to 5,000. Thank you. For plant and machinery, someone should compute it for us. 1.75 minus 875,000 divided by 4.
418, 750.
Eh?
418,708.
418,000. Please call the figure.
8750.
48750.
218. 418,000.
You know what? I can't hear you very well. Let me just
Is 218,750.
218.
750. That's what you said.
Okay. I could not hear you very well. How about for this one? It's just to say this times 0.25. And we have this. Is this correct, please? Let me confirm. What's at 7,500? Is it correct?
Is that what?
Said, is
Yes,
this
it's
Correct.
correct.
okay? Thank you. So this is for what year now? This is for what year? 20, 2015, right? 2015. And what will be the basis period? We have to put the basis period in bracket. The basis period is what year to what year? The basis
First
Right.
period
of
is 1st of June No, 1st of July
July
2013.
2010, thank you, 2013 to 30th of what? Of June 2015. 2014. All right. So so can you please compute all of this for me? Let me just sum it. So for us to have our capital allowance here, we'll just do basically do the summation of everything here. All right, and that is our capital allowance for this particular. Okay, that's our annual allowance. So let me do it for this one too. Our initial allowance for that particular year. So we have what now? So our total allowance for this year is what 4.45. So we then do 20. Please, are we following this? I hope I'm not making any magic. Are we
Yeah.
following?
yes sir.
Is there any question up to this point? This is one of the simplest questions. It's just to refresh like everything that we have done because you did not even do any allocation schedule because everything was acquired in the same year. They did not even tell you, okay, they did not even give you acquisition detail. We are all assuming that everything was acquired at the beginning of the year. So we are not prorating, we are not doing anything. We are just simply going ahead with the question. All right. So for the next one, we have what will be the basis period for the next one, for the next year of our assessment?
First of
It will be
July
first of what is 1st of July 2014 to when?
31st June
June
2015.
15. Thank you. Now, in this case now, is it cost you are going to have, or what are we going to have now? Are we going to have any cost again?
No sir.
What are we going to have? We are going to have what we call tax written down value. You only have your cost when you have a new asset. After your costs for subsequent years for the same assets, what you have is what is your tax written down value. Because for you to get the value of that particular asset in subsequent years, you have to what deduct your initial. Please, can you mute yourself? Someone is unmuted. For us to have the values of the asset for subsequent years, we have to remove what we call what the initial allowance and the annual allowance and be left to what we call the tax written down value. It's very similar to what we call balancing carrying amount rather in PPA or in normal accounting. All right. Our carrying amount is what our cost minus our depreciation or our accumulated depreciation. The same thing we are doing here. We are removing our accumulated allowances, that is our initial and our subsequent annual allowances from the costs. So for this now, since we do not have any new assets, all we are going to have for all of them is will be tax written down value. And our tax written down value will be what for the first years. In the first year, we will have for the second year rather, we are going to be removing our initial allowance and annual allowance from the costs. All right. But for subsequent years, it will just be our annual allowance that will be removing because there will no longer be initial allowance. I hope that is clear. So can we provide the figure, please? I expect that we have our calculator. I don't want to be using this exact formula. All right, please, can we compute 5 million minus 750,000? Someone should be doing for PM and MV already, but someone should give me the value for industrial buildings. 5 million minus 750,000 minus 425,000. While another person is doing for PM and another person is doing for motor vehicle. Please, oh yeah, fast, fast.
Industrial building.
825.
Okay, who is talking, please? Someone should talk.
Industrial building.
For industrial
Three
buildings,
million.
okay.
Yes, 3,825,000.
3,805,000.
25,000.
All right. For PM, Oh yeah. I expect that someone is already doing for PM and motor vehicle.
656,
Six
Eh?
656, 250.
656250. All right. Motor vehicle, please.
million 312
1,312,500.
500.
Okay. Thank you. Now, let me see who is on the call that can ask this question. I've not been hearing Chidima. 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 Unmute yourself. Chidima, unmute yourself now. Chidima, please unmute yourself. Chidima, are you in this class? Uh, who else can I ask? Abiodun, are we going to see have initial allowance for the next computation?
quota
So what are we going to have?
allowance.
And the shortcut is that because we have not prorated the annual allowance for annual allowance is meant to be the same thing year on year because it is on straight line basis. It's just like saying that you are computing your depreciation on straight line basis. You know, if you are computing your depreciation on straight line basis, you have equal amount of depreciation in each of the years, right? The same thing with our capital allowance. So it is on straight line basis. However, at times, the capital allowance for the first year and the final year will be different, definitely. The first year will be different because at times we have to prorate it. Okay, we have to prorate it for the number of months that it was actually used during the period. Am I communicating?
Yes, sir.
So after we are prorated from the second year, we expect that because that second year now is a full year, we expect that the annual allowance will be so once you compute for the second year, you don't have to be recomputing your annual allowance for the other years. And if you are lucky and you do not have to prorate your annual allowance from the first year, it means that it is just once you have to like do a working for your annual allowance. For instance, for this question, and the one reason why I said that it is a very easy question is because we did not have to prorate our annual allowance in the first year. It means that this 5,000, 200,750, 437,500 will be the same thing. Am I making sense, please? So all I have to do for this now is just up here and come and paste it down here. Does it make sense, please?
Yes, sir.
Does it make sense? Something has changed because I otherwise it. Does it make sense, please?
Yes, sir.
All right.
Yes,
So I will just do a summation for this one. And because there's no initial allowance, this will be our total allowance for the period. So we'll go again for 2017. I'll allow us to do for 4 years. We cannot do for the 10 years. Just do for 4 years and we'll close the shop. Sorry, this one should be 2015. This one should be 2015 and this one should be what? 2016. And we are good. Okay. So for this now, we have our tax within that value. Our tax within that value will be this minus this. So yeah, someone should do for industrial building, someone should do for plant and machinery, and someone should do for motor vehicle. Fast, fast. I want the figures, please.
3,400,000.
3,200,000, 400,000, right?
Yes, yes.
For plant and machinery,
437,500.
that is, why is it Abiodun that is giving us all of the figure? Abiodun, I don't want you to give us all of the figure, please.
Check on Muibat. She has been quiet somehow.
Muibat, are you there? Muibat, are you in this class, please?
Sorry.
What
Yeah,
is wrong? Are you following? Look at network is bad. Okay, Okun Victor, you wanted to give us the figure for motor vehicle. You can go ahead, please.
It's 437,500.
437,500.
That is plant and machinery.
Plant and machinery is 437,500.
Yes.
Okay, 437,500.
But
What
it's
about motor vehicle?
870, 875,
Osana,
875,000.
875,000. All right, thank you for that. So we have our annual allowance again for this. Our annual allowance will remain the same. Am I correct? Can you start? This question is actually very, very simple. And we also have this as well. Then the fourth year, which will be the final year. Don't forget, PM and motor vehicle has how many years? They have how many years rather? 4 years each, right? Because they are 25%, 25%. Am I correct?
Yes.
Okay. They each have 4 years. So it means that 2018 will be their final year, isn't it? So for
Yes, sir.
2018, now let me first write the basis period. What will be the basis period for this one? 1/7/2016 to 36 rather. 36/2017. And we have tax written down value and AA again. So for this guy now, for this particular guy, industrial buildings, its own useful life is how many years? Okun Victor, how many years is the useful life for industrial buildings? Eh?
10 years.
So that one will continue like that until the 10th year. Thank you so much. So we cannot do for 10 years in this class, except we want to use all of our time to do this. So we'll just do for this will be the final year because the plant and machinery and the motor vehicle has just 4 years. And remember, I said that when you get to the final year, what do I say you will do? Your annual allowance will be less by 10 naira because your assets must have a residual amount of 10 naira, even though they have been fully depreciated. If you permit that statement, they have been fully the capital allowance on them have been fully enjoyed, but regardless, 10 naira has to be what retained in the book until that particular asset is sold. Do you understand? So it means that all of the capital allowance the annual allowance that we're going to be computing for plant and machinery for this particular year, we are going to deduct 10 naira from it so that eventually we will have a tax written down value of what 10 naira for each of the assets. Do you understand what I'm trying to say? But first of all, someone should give me the annual allowance for tax written down value rather for industrial buildings. 3.4 million minus 425,000. Oh yeah, oh yeah.
2 million
2
5 5.
million 275,000.
2,975,000.
Yes, sir.
How about for this one?
218,750. That's for plant
You,
and machinery.
yeah, you can see that it is now remaining exactly the annual allowance. It remains exactly 1 year. So after this year, we'll just there's nothing to allow again. What they have for this one? Is it the same thing? 437,500.
Yes, sir.
Okay, 437,500. Now, what is now the annual allowance? The annual allowance for this one from industrial buildings will still be what? Chidima, I want you to unmute your mic and respond to me, please. I need to be sure that you're in this class. For industrial buildings, the annual allowance will be what? So yeah, yeah, someone should respond now.
For industrial building.
Industrial
Four,
buildings is
four,
still
425,000.
it will still be 425,000 because it has 10 years useful life. All right, 425,000. But however, for this one now, we have to remove 10 naira from it in it. So what do we have? 218. Because this is the final year. Normally, if not because we want to retain 10 naira, we should have just allowed the remaining amounts. You get what I'm trying to say? But we have to retain, according to the law, we have to retain 10 naira for the both of them that have been fully allowed. All right. So what do you do? You say 218,750 minus 10 naira. What do we have? So that's the amount we can allow.
218,740.
218,740. Thank you. Please, there's a reason why I don't just assume that it's not this figure minus 10 naira. Don't go and assume that it's messes people up. Before you know it, you go instead of putting 999 or 990, you go and put maybe it's for 450,000 you wanted to deduct 10 you wanted to deduct 10. I just feel like is it not just 10? I can use my head to do it. And you go and put 440,000 there instead of 449,990. Do you get what I'm trying to say? So it's always safer to it's something that has happened to me before. It's always safer to use a calculator. All right. 437,500 minus 10 naira, please.
437,490.
437,490. All right. So what do we have here? We have yeah. So therefore, in 2019 now, or we don't even have to just put our tax in that. So our tax in that value after that period will now be what? This one will be 10 naira. This one will also be what? 10 naira. And this one will now be what? Someone should compute 2.9575 minus 425 for us so that we can close this book, please. Eh?
2,000.
Two what?
2,550,000.
Okay, 550,000. And we are done. So these are our capital allowance for the periods. I'm trying to bring this out. All right. So these are our capital allowance for the period. Is that taking place?
Question, sir.
Is it taking place?
Yes, sir.
Yes, but question.
Okay, please ask the question, please.
Yes, sir. My question is on the tax written down value.
All right.
I was thinking that the first tax written down value we have in the question was it not supposed to be for
Wasn't supposed to be for what?
2050 of assessment?
So the first year of assessment is 2015,
Yes.
and that was the year that the assets were introduced. So it's just like saying the balance that you brought forward. All right. We could have had it for, we could have said as at the end of, so this tax standard value now is as at the end of 2015 and at the beginning of 2016. Do you understand? It's like saying balance carried down and balance brought down. This figure that we have here now is as at the end of 2015 and as at the beginning of 2016. Because I could have as well just deducted my figure here and have it here, then still come and bring the same thing in the following year. But there's no need for that. I don't know if that is what you're asking.
Part of what I'm asking, because I was thinking that the 10, what is it called now? The 10 naira will actually retain before the disposal of the assets, right?
Okay.
I was thinking it was supposed to be in 2019.
Yeah, of course, it's supposed to be in 2019. Yeah, definitely. That's the same thing I was saying. You can also put 2019 here. It's still the same thing and have it like this and just put your basis period. All right. It does not change anything. You understand
Okay.
what I'm trying to say? This
Yes.
balance, this balance is for the end of 2018 and for the beginning of 2019. So you can if you have it as like this, it's showing that this is what is left after you have removed for after you have adjusted in 2018. Do you understand? So if you want to continue, that is when you now put 2019 here and then continue like that. I don't know if you get it. It's like you saying, it's like it's just the same thing with PPE schedule. Actually, it's very similar to PPE schedule actually. For your PPE schedule, you have your balance as at the beginning of the year. Then you have your depreciation, amortization, reclassification, and all of those adjustments. Then you have your balance as at the end of that year. The balance as at the end of that year will be the same thing as the opening balance for the following year. All right. Do you get what I'm trying to say now? So this tax down value, which the balance as at the end of 2018, is the same balance opening 2019. Do you get it now, Okon Victor?
Yes, sir.
So you can, if you put 2019 here, you put your previous period, you are still correct. You are still very right. Is that fine now?
Yes,
I'd
sir.
like to confirm what the actually has as their solution.
So, excuse me, sir.
All right, please go ahead.
Assuming this question was to be our exam question.
Okay.
So this actual allowance for industrial building will continue till the period of 10 years.
Yes. So most of the time, except they want to give you except they want to give you a full question on capital allowance, most of the time they would say that so capital allowance doesn't just stand alone, right? Most of the time it will be to compute maybe your assessable profits. Do you understand? So in that case now, what will form your relevant years of assessment will be the the years for which they provided your stable profit for you. This is what I'm trying to say. If, for instance, they want to give us a full question on, full question, they can give us as the adjusted profit for different, let's say for 2015 or 2014 to say 2019. And then they will give us all of this question and ask us to compute the capital allowance. So it will now be our duty to compute the capital allowance for each of the years of which we want to compute our profit for. So you might not necessarily compute your capital allowance for the entire years until you compute for all of the assets because that might waste your time. That's what I'm trying to say. You will just read through the question and based on the requirement of the question is what you will do. Do you understand what I'm trying to say? For instance, now if the capital allowance that you need is just for 1 year, there is no point doing that If the capital allowance that you did is just for 2015, if you have gotten for 2015, you don't have to keep computing for 2016 and other years. Do you understand what I'm trying to say?
Yes, sir.
Yeah. Or if it's the full question of capital allowance and you feel like you compute for the relevant years of assessment, I congratulate you. You have to do everything. Do you get me now? But what you
Yes,
do is dependent on the situation of the question. I do not really understand what they have done in their own sorry. Okay, that's number one. This is number one. Okay. Okay. I get what they did there. What they did there is I want to go that route. I've not got things like disposal and balancing check and balance allowance check. But when we do that, we should do that with full account. Once we do that, we can go the route of disposals and see how we treat disposals. Let's just, but do we understand this first of all? Do you understand this based on what we have done?
yes,
Do
sir.
you, do you understand? Can we move ahead to the other part?
Yes, sir.
Okay. All right. Thank you. Let's go ahead. I saw the chat the other time. Okay. That's from the admin. All right. Um. Now we have dealt with this. Now let us deal with disposal of qualifying capital expenditure. Disposal. I do not want to explain what they did in that particular account pack first because I've not thought I would just be confusing you by explaining. All right. So let us talk about the disposal of qualifying capital expenditure. How do we treat disposal of key stocks? We understand that an asset has been in use by a particular taxpayer can be transferred even before it has been sorry, excuse me, even before it has been fully allowed for. All right. It can actually be disposed. So how do we treat it? Now, qualifying capital expenditure, right, is
Please, sir.
deemed
Somebody's mic is making noise.
okay. So please mute yourself, please. Everyone, if you're not saying anything, please just mute yourself. Thank you so much. Qualifying capital expenditure is deemed to have been disposed when the relevant interest is sold or transferred to other party. All right. In normal accounting, we will call it what controlling interest or when the economic power has been transferred to another person. That is when the ability to generate, economic benefit from that asset has been transferred to someone else. We say that the person that what holds control for the assets. You understand what I'm trying to say? So for here we are saying that if we can only say that an asset has been transferred when the interest has been transferred to another party. The interest in that particular asset has been transferred to another party. So for instance, now I have a motor vehicle. Then I then give out or transfer the motor vehicle to another party to run his own business for a consideration. In that case, I can say that I have what disposed that motor vehicle to the other party. Now there is a note here. When a qualifying capital expenditure is disposed, the tax written down value at the year of disposal must be ascertained and used for the purpose of computing the profits or loss on the QC. And this is where we bring in the concept of what? Balancing charge and balancing allowance. Again, I would say that it is very, very similar to what we have in what our PP in our IS 16. But for the sake of people that are not doing financial FR right now, right? What this is simply saying is that when a particular asset is disposed, what you have to do is to ascertain what the tax written down value of that asset is as at that period in time. Then compare what the tax written down value is together. You compare it with rather the consideration that was received for that particular asset. Now, if the tax written down value as at that period is more than or is less than, let's take the first, let me take it again. If the tax written down value as at the period of disposal, please note this down, jot it down, please. If the tax written down value as at the point of disposal is more than the amount that you received for the disposal, it means that you have made a loss. Because what it means is that you have sold the asset. For instance, you have been allowing for a particular, let's say motor vehicle, as 4 years. You got it for 4 million naira, 5 million naira. The initial allowance is 2.5 million. The annual allowance is 2.5 times 25%. Let's assume that the annual allowance is just 400,000. As at the second year, then you decide that you want to sell this particular asset. Let's assume that the tax written down value as at that point is 2 million naira. Then you now went ahead and sold it. Don't forget, our tax written down value is very, very synonymous to what we call carrying amount in our normal account, in our normal FR. Let's now say that the amount you now sold the assets is now less than the tax written down value or the carrying amount of that asset of that QC as at that period. What has happened? You have made a loss. You have made a loss. But in a case where your tax written down value, which should be the case, is lower than the sales proceed or the consideration that you have received for that particular asset, what have you done? You have made a profit. Now, listen to this very, very well. Just like in the case of loss relief, when you make a loss, what does the law do? The law compensates you by granting you a relief against future profits. Similarly, here, when you make a loss on disposal of your assets, the law grants you what we call balancing allowance. Naturally, when you hear the word allowance in tax, always know that it is what? It is a relief. Just like capital allowance, it's just like balancing allowance. Capital allowance is a relief on acquisition of qualifying capital expenditure. Balancing allowance is a relief on the loss made on disposal of what QCE. Balancing charge, on the other hand, is when you make a profit. It is an additional charge for you because you have made a profit on what? On the sale of your fixed assets. Okay, because you have made a profit on your sale, it is an additional charge. Am I communicating, please? I want you to jot that down. That is the reason why this particular note is saying. That's the reason why this particular note is saying that the tax written down value at the year of disposal must be ascertained. That is, you must get your tax written down value for the year of disposal. And you must now use it to compute for the purpose of computing your profit. That is, how do you compute your profit? You compare it with the amount that you have received for the disposal. If the amount is more than your tax return value, it means that you are in profit. Then it means that what you have is then a balancing charge, an additional charge on the sale of your asset. On the other hand, you would have a balancing allowance if you have made a loss, and you would have made a loss where the tax return value is lower, or no, sorry, is higher rather than the amount you have received for the disposal of the assets. Then maybe we finish reading this, then I'll ask us a question. If a portion of the asset is disposed, the portion of the asset disposed as well as the tax return value must be determined. This is to be deducted from the value of the remaining assets at the date of the disposal of assets. So what this is saying is that, say for instance, you did not sell the entire assets, and this is very common in the case of building. A lot of companies in Lagos since COVID-19, after COVID-19, realized that they do not actually need as much space as they were using before COVID-19, because from COVID-19 period, everybody started working from home. Then the space was vacant. A lot of them were trying to like cut down on, you know, or trying to like maximize the space. A lot of them gave out some of the space as rent. Some of them actually sold portion of their building. So if they sell a portion of their building, how do you account for that? You have to determine what is the proportion of what is the proportion that was sold, and we must actually ascertain the tax written down value. Is there any question up to this point? Elizabeth, do you understand? Elizabeth, you are welcome. You joined late, but do you understand what I'm trying to say? Do you understand the explanation?
Yes, sir.
Are you sure?
Good evening, sir.
Good evening, Elizabeth.
Yes,
Are you
sir.
sure you understand?
Sir. Yes, sir.
Chidima, do you understand the explanation? Chidima is not in this class. Okun Victor, please, do you understand the explanation?
Very well, sir.
Very well, right? All right, thank you. Osana, do you understand the explanation?
Yes, sir.
Yeah, sure.
Yes, sir.
All right. Muibat, do you understand the explanation? Muibat, I cannot hear you.
Yes, sir. Sorry, I'm back.
Okay.
It's a connection.
Oh, so sorry.
Yes, sir.
But do you understand the explanation that I gave?
Well, I didn't get everything you gave, but I don't know if you've entered another because I'm just joining back right now.
Okay, let me
Yeah.
ask. The videos from the previous classes, were they shared with you?
Video? No.
The recording.
No, not all.
So
No,
I'll ask the reason for that. The
yeah,
video,
few of it for taxation came in, but
uh, okay, because it is actually being recorded, so I expect that it should be shared with you guys. So I'll follow up with that. So that if, even if there's any part that you have missed,
Yeah.
you can catch up on it. But I'll just like reiterate what I said. But let me go through everyone first. Abiodun, did you understand
Yes.
the code explanation? For the sake of Muibat, because it's actually a very, very important section, I will just like reiterate that we were talking about disposal of qualifying capital expenditure, and we said that for you when you dispose your QC, one thing that you must do is what is to ascertain your tax written down value. And I believe that we all know how to ascertain our tax written down value. Our tax written down value is simply our cost minus our allowances. That is our tax written down value. Now you must ascertain that because that is what you will use to know if you had actually made a profit or you had made a loss for the period. All right. And how do you know that? By comparing your tax down value with the sales proceed. By comparing your tax down value with the sales proceed. Now I said that if your tax down value is more than your sales proceed, what does that mean? It means that you have short sold the assets. You have made a loss. And if you make a loss, this what the law allows is what the law allows is what the law how do I put it now? What the law prescribes is that you you are given a balancing allowance. And then I said something. I said that naturally in tax, when you hear the word allowance, what should come to your mind is what relief. In taxation, allowance is another word for what relief. When you hear the word allowance, it means that your liability is being reduced. So it is synonymous to when we were explaining the loss relief time. And we said during loss relief, we said that when a company makes a loss or when a taxpayer makes a loss, we said the law allows the taxpayer to relieve that particular loss against future subsequent profits. All right. Same thing here. You have made a loss on the disposal of your QC. The law allows you to enjoy what we know as what a balancing allowance, which is a relief. That is relief, just the way it sounds. They are excusing you from some liabilities. On the flip side, if the amount that you sold the asset is more than the tax down value as at that particular period, what it means is that you have actually made a profit from the sale of that particular asset. And the implication is that you would what? Pay a tax on the profit that you have made on the sale of the asset. And that is what we call what? Balancing charge. That is what we call what? Balancing charge. Am I making sense, please? Muiba, do you understand it now?
Yes, yes, sir. Yeah, I get it.
All right, thank you so much. Move ahead now. Treatment of balancing charge. It should be noted that the balancing charge to be subjected to tax cannot exceed the total capital allowance granted on the assets from the date of acquisition up to the point of disposal. This is very, very, very important. And I will explain what we are saying here. Recall that I said that your balancing charge is an additional charge. It's just like you have made a profit on sale of on disposal of your assets. What happens? That you are charged for that profit that you have made. Okay? But now we are saying that when you make a profit, the additional charge is what is called what balancing charge, right? But we are now saying that when we are treating our balancing charge, The first thing to note is that the total number of balancing charge that can be subjected to tax cannot exceed the total allowance that the taxpayer has enjoyed from inception up to the point of disposal. We are going to be seeing it with this illustration that I have here. So, but before we take that, let me give you an arbitrage or like a an abstract illustration. But before I do that, I want to confirm that everyone is following. Please, two people should confirm that they are following me.
We're
Two
following
people
you,
should.
sir.
I am. Yeah.
Okay. Right. Thank you. Now, when we are treating, okay, I said I want to give us like an abstract example. So, say for instance, let me put it in the Excel. Say, for instance, you bought a particular asset, the cost of the assets, bought a particular asset for, say, 2 million naira. Then the asset has used, let's say the asset has used 2 years now. And then you now sold that particular asset for 500,000. Selling price 500,000. 500,000 will be 0.5 million, Abi. 0.5 million. Okay. Well, let me do it like this so that it can make more sense. Let me just approximate up and write 2,000 here. 2,000 here. That is 2 million, right? Then 500 here. I hope you are following, please. Now, you sold the particular assets after 2 years. All right. What is the loss? What did the law says? What is the principle when you are dealing with disposal of asset under capital allowance? What do you do first? You ascertain what the tax written down value is. That is the first thing to do. Once you are able to ascertain what the tax written down value is, what do you do? You are from there you are able to what ascertain what if whether you have made a profit or you have made a loss. So let's assume that the initial allowance for this guy was 1 million naira, and the annual allowance for this guy is 200,000 naira. For the 2 years, let's say it is 400,000 naira. Let's say it's 400,000 naira. Let's say you now sold the asset for 900,000 naira. Are we following, please? Are we following?
Yes, sir.
Okay. I said the first thing to do when you're dealing with disposal of assets is to what? Ascertain your tax standard value. So from here now, what is our tax standard value?
600.
600,000. Thank you so much. 600,000. Okay. 600,000. Now, we are now saying that, so 600,000, and then what is now the selling price? We want to know if we have actually made a loss or a profit from it. What's our selling price? Our selling price is
900,000
100,000. Is it a balancing charge or a balancing allowance?
is a balancing charge
Why? Because the
because we made profit.
category has made a profit of how much? 300,000.
300.
300,000.
Now, what the law is now saying is that This is balancing charge, right? Because it's a profit, right? This is a balancing charge of 300,000. What the law is saying is that this balancing charge must not be more than the total allowance that the taxpayer has enjoyed since the inception or since date of acquisition to the point of disposal. For the purpose of illustration, let us assume that this asset was sold for 2 million naira as well. And then the balancing charge would have been now be what? Let's say it was sold for 3 million naira. Just for the purpose of illustration, please. Let's say it was sold for 3 million naira. And the balancing charge would have been 2.4, right?
Yes.
Right?
Yes. Okay.
But the law is now saying that you must compare this and restrict this balancing charge to the total allowance. That is, the balancing charge for a disposed asset cannot be more than the total allowance that the taxpayer have enjoyed on that particular asset. So, what is the total allowance that the so we cannot even call this our balancing charge yet. That's what it means. So, what is the total allowance? We will now compare this profit. Let's call it profit. We will now compare this profit to what the total allowance that has been enjoyed on the assets. What is total allowance that's been enjoyed on the asset from reception now? Oh yeah, someone should. Eh?
1,100.
1,004.
1,400. What the law is saying is that because the amount that has been made on the asset is more than the total allowance, we have to restrict the balancing charge towards the total allowance. So our balancing charge will now be what? 1,400.
400. Mhm.
Does that make sense? Our balancing charge.
Yes.
This is our total allowance. Am I communicating, please? Then the
Yes.
que- the question now arises. I want you to please follow me, please. Once you get this, you get it for life. The question now arises. We are restricting the balancing charge, the amount that can be taxed on this particular asset. We are restricting it to the total allowance that has been enjoyed, which is 1,400,000. The remaining, because the profit that we actually made is how much? 2.4 million, right?
Yes.
Yes,
Right.
sir.
So what happens to the remaining 1 million? Will it not be taxed? Will the taxpayer just go scot free for it? Because it looks like this is the only amount we are charging. We are saying we should restrict the balancing charge to the amount of total to the total allowance that has been enjoyed, and that's the only amount we should tax rather. What about the remaining amount? We sold the guys. What will happen to the remaining 1 million there? Who can give me a trial? Who can give me what should happen? You know they will see the remaining 1 million naira. What will happen to the remaining 1 million naira? What will happen to it? The remaining 1 million naira, what will happen to it? Let me bring it down here. Yeah. I want someone to try. Let me Muiba to ya try. What do you think we should happen to the remaining 1 million? Muiba,
Yes, sir.
I hope you are putting this thing in our note too. Although
Yes.
we'll still have a structured illustration. That illustration I deliberately put it there so that we can have it to crown the explanation up. So what do you think should happen to this 1 million naira? Should the taxpayer just go scot free with it? Because the only amount we are taxing now is the 1.4 million naira, which is the total allowance. Yeah, because we are restricting to the total allowance, that's what the law says. But the remaining 1 million naira from the 2.4 minus 1.4 that we are charging, we actually sold for 2.4. So it means that
Yes.
there's still remaining 1 million
There's
naira.
1 million.
Yes. What? How do you think? Will it be taxed? How do you think it should be taxed? Even if it will be taxed.
Uh, I
Just, I want to just give us any idea that comes to your head. What do you think? Or if you think that it should not be taxed, just say that it should not be taxed.
because we've been told that you should be restricted to um
The total allowance from the date of
yeah,
inception or the date of
yeah,
acquisition to the date of disposal. So, but there's still like if it is restricted, what about the excess? How do we do that? How do we treat the excess after the restriction? How do we treat it? Okay, let me. Who wants to give us a trial? Who wants to give us a trial? What do you think? What do you think? What do you think? Who wants to try? Who wants to try? Who wants to try? Who wants to try? Who wants to try now? Nobody. All right, let me just go ahead. Now, this 1 million naira. If you think about it well, you realize that who am you realize that it's like a capital gains for this guy. Capital gain for the guy. Yeah, who has heard about capital gains before? Okay, have you heard about capital gains tax before? Have you heard of capital gains tax before? Have you heard of capital gains tax before? Okay, if you have heard about capital gains tax, please indicate. Oh yeah, oh yeah, oh yeah, oh yeah, oh yeah. Okon Victor, you have not heard about capital CGT before. Okon Victor, have you heard of CGT before, please? Elizabeth, have you heard of CGT before? Nobody's unmuting. Are you people following me? Hello? Can anyone hear me?
yes, I
Yes.
can.
Yes, sir.
Yes.
Why we now not unmute? I was asking a question. People that was asking the question were not unmuting. Okun Victor, you can mute yourself. Your network is bad.
Okay.
Elizabeth, I said, have you heard about capital CGT before? Just a yes or no. Oh, okay, your own network is bad too. Osana, have you heard of CGT before?
No, sir.
Abiodun, have you heard of CGT before?
I have, but I can't remember. But I've,
Muibat, where's Muibat is out already again. Oh, okay. Muibat is not here again. And Muibat is here.
Yeah,
Muibat,
I'm here. I'm here.
have you heard of CGT before? Have you heard of CGT, Muibat?
Yes, I've heard of it before, but not
Oh,
very clear.
all right. So I believe maybe either myself or my other lecturer, the other lecturer, It's going to take you on capital gains tax. But the idea is that what I'm trying to like emphasize is that this remaining 1 million naira is like a capital gains, is like a capital gain for the guy, for the taxpayer. So the 1 billion naira that is excess will not be taxed here. Rather, it will be taxed under capital gains tax. All right. And capital gains tax is like, I think it's 10%. It's not, I think, I know it is 10%. Capital gains tax is 10%. So it is the 1 billion naira is not going scot free. Oh. It will be taxed under capital gains tax. Capital gains tax has its own act, has its own law. So it is under that the remaining excess will be taxed. Do you understand what I'm trying to say now? As far as we are concerned here, if the profit exceeds, if the profit rather exceeds the total allowance that has been distant, our balancing charge has to be restricted to what? To the total allowance that has been enjoyed. Then the excess will be dealt with under capital gains. Is there any question before we go into the illustration that we have? Any question, please? Any question, please? Any question? So we have this solution. We have this question rather. We have this illustration. All right. Have you jotted this one down? Or there is no need, right? Maybe I
Yeah.
believe the this thing should cover for it. So we have illustration on this disposal of his KC, right? Let's see. I'd like to do this. All right. Okay, so how do we treat it? So we have illustration. We have an illustration. In this illustration, they have made life so easy for us. The first thing they even give to us was our tax reason down value. They gave us tax reason down value to be what? 900,000. Am I right? Let me just put a naira sign on top here. 900,000 naira. Then we have capital allowance, both initial and annual allowance on the QC to be what? So the total allowance, what they are simply saying is that they said capital allowance, both initial and annual allowance. It means that they have some both up, and they are telling us that the total allowance on the QC is what? Oh yeah, is what? Are we together? Are we together?
Yes, sir.
The total allowance is what?
233.
233,333. All right. Now the sales proceed is how much? 1,250,000. All right. 1,250,000. They now say that you have to calculate the balancing charge or balancing what allowance. The balancing charge or the balancing allowance. Abiodun, how do I ascertain if it is a profit or a loss?
When
How
the
do I?
sales proceed,
Eh?
here the sales proceed with the tax written down value.
So we compare the sales proceed with what tax written down value. And from here we can see that the sales proceed is more than the tax written down value. So what this means is that it's going to be a balancing chart. So the profit is what? 1.25 million minus 900,000. That should be what?
350,000.
Yeah?
350,000.
350,000. Give me a minute. Let me check something. Just a minute, please. Listen to see how far I have to go. Okay, I don't have it here. All right. All right. Okay. So I just wanted to be sure of my format. So we can have this as balancing charge or balancing allowance. That is, if it is balancing allowance, it will be in brackets. Okay. So this is our balancing charge or balancing. I don't want to be having profits, then now be having. So if it is actually in profit, then it means that it is a balancing charge. If it is a loss, then it means it's a balancing allowance. Do we all understand that? Is it clear?
Yes, sir.
I just need I
Yes,
just
sir.
needed to I just needed to quickly confirm that. So we have this as our balancing charge or our balancing allowance. So we can say that it is in positive, that is our sales proceed is more than our total tax written down value, right? Which means that it is a balancing charge. But however, according to the law, this balancing charge has to be restricted. Restricted to what? So you have restricted
So the total allowance.
to total allowance, right? And how do we do that? So it means that since the balancing charge is now more than total allowance, means that total allowance, balancing charge will not be restricted. That is to be now be 3323333. Exactly. That is this is the total balancing charge that can be taxed here. You know this balancing charge will be taxed, right? So this is total charge that can be taxed under this particular act, right? So the excess which is 350 minus 233,333 will now go towards
Capital
capital
gain.
gains
Okay.
tax. Did I say is equal to? I don't want to is equal to now. What is capital gains tax? Does it make any sense?
Yes, sir.
Does it make sense? Okay. If you think about it well, you understand the rationale behind it, right? The rationale behind it is that you have transferred your interest, right? It means that part of the proceeds that you are collecting, right? You have sold, okay, part of the allowances that you have enjoyed, we have to like bring everything back and restrict the amount that you're supposed to pay to the total allowance that you have enjoyed in the past, right? And then tax that. Then the remaining amount, right? Everything should have been like capital gains, right? But because you enjoyed some allowances under the company income tax or under the capital allowance provision, we have to like restrict that balancing charge to the total allowance that you have enjoyed and tax that year. Then the remaining excess can now go under capital gains tax, under capital gains to be taxed. Is it clear, please? Is it clear?
Yes, sir.
Yes, sir.
All right. So that is that. What else do we have to discuss? Balancing allowance. Let's talk about balancing allowance. This is also known as a loss on what's on disposal. I think I already mentioned that, right? It's a loss on disposal. That is a case where the sales proceed is less than your tax down value. That is, you have short sold the asset. It is a situation which arises where the sales proceeds from the disposal of qualifying capital expenditure is less than the tax written down value as at the time of disposal. I've said that over and over again. Balancing allowance shall only be made in respect of the assets if immediately prior to the disposal. Let me take that again. Balancing allowance shall only be made in respect of the assets if immediately prior to its disposal was in use by the owner in trade or business for the purpose of which the qualifying expenditure was incurred. What this is simply saying is that it is a relief. So whenever you hear allowance, it is a relief. And whenever there is a relief, tax law will always give conditions because they do not even want you to enjoy it in the first place. They want you to pay. They don't want you to have any relief. So there must be a condition. And what is the condition? They said for a taxpayer to be able to enjoy this balancing allowance, that particular asset that was sold must have been in use by that particular taxpayer immediately as immediately before it was disposed. That is, I must be using this up until the time I disposed it. It is not one asset that I have gone ahead and abandoned somewhere, or one asset that it is no longer in use for me. Do you understand what I'm trying to say? It must be in use for the purpose for which I actually bought the asset for. Not that I bought this motor vehicle and instead of using it for my big bakery business for which I should be enjoying capital allowance on, I've now abandoned it and then my driver has now been using the bus to take my children to school or to take the children to school. Not my children, but the children to school. Do you understand what I'm trying to say? I've been not been using to take the children to school and not using it for the business for which it was bought for anymore. And then eventually, the person now sold the assets, right? Sold the assets. In that case, there's no way he can defend that he wants to enjoy balancing allowance on that particular asset because in the first place, it was not using it for the purpose for which he incurred the qualifying capital expenditure. I don't know if you understand what I'm trying to say. So, what is the treatment of balancing allowance? So the law says that it is an additional allowance granted by the authority to the taxpayers that it is like an additional relief for the taxpayers because they have made a loss on disposal. It should be noted that there is no restriction to the amount that can be granted as balancing allowance, unlike under balancing charge, where you have to restrict the total amount of balancing charge to the total allowance that has been enjoyed in the past by the taxpayer from the date of acquisition to the date of disposal. Here, there is no restriction. Am I making sense, please? If this allowance cannot be fully recouped, it can be carried backward for 5 years before the company ultimately ceases operation. What this is saying is that assuming the company got to a point where we know we say that there's those restriction to this. It means that until you eventually fully enjoy that allowance, you will keep carrying it forward. That is what it means in, into infinity. Let's now say that anything that happens that now made it impossible for you to be able to like continue to recoup that particular capital allowance. The only example that is the only reason that is coming to my head that will not make you to be able to enjoy that is if you cease the operation. If you are still in operation, at least there will be a point where you will eventually make profits and you'll be able to enjoy the allowance. But when you cease operation, then what now happens? That allowance that you have not enjoyed, what now happens to it? Will you just forfeit it? No. The act is saying that that particular allowance, that excess allowance, the all recouped balancing allowance rather, can be carried backward up to 5 years. That is, say you ceased operation in 2022. It's saying that you can carry that particular balancing allowance that you have not enjoyed backward up until when is 5 years before 2017 can be recouped up until 5 years prior to the date of cessation. But how possible is that? Because you, if thinking about it, it looks like it does not make any sense, and actually, it does not make any sense because this previous year's assessment that you want us to go and be enjoying the balancing allowance against, we have filed the tax, we have closed out on the assessments. Do you get what I'm trying to say? We have filed, we have paid the tax on those years. What then happened? Actually, in principle, what should have happened is that the authority should have reimbursed the taxpayer in cash for the unrecouped balancing allowance. But do they do that in practice? I do not know. Please confirm that you understand what I'm trying to say. Confirm that you understand what I'm trying to say. Hello, can you confirm that you understand me?
Please
Can you?
recap, sir.
Yeah.
Okay, I should recap. What I'm saying is that Muibat, you will recall, and everyone, you will recall that under balancing charge, you say that balancing charge has a restriction. It has to be restricted to the total allowance that has been enjoyed. All right. And that is the amount that will be taxed. For balancing charge, we are taxing. For balancing allowance, we are relieving.
Mm.
Balancing charge is additional liability. Balancing allowance is relief.
Yes.
Under balancing allowance, we now say that unlike balancing charge, here there is no restriction.
Mm.
The taxpayer will keep enjoying the relief until he is done
Right.
enjoying it. Do you understand what I'm trying to say? Just like in the case of loss relief, he will keep
Yes.
enjoying it. However, the act is now saying that if there is any reason why the company will not be able to enjoy it, and the only reason that is coming to my own head, and I believe that that is what they also had in mind when they were setting it,
Reversion
is when the company ceases
to exist.
to exist, cease their business or their trade. The law now says that if that now happens, the company or the taxpayer can actually recoup the capital allowance up to 5 years prior before the ultimate date of cessation. And I made an example. I said, for instance, if they cease business in 2022, it means that they can go back up until 5 years to enjoy that capital allowance. I said capital allowance, that balancing allowance, rather.
Yes.
Do you understand what I'm trying to say? So it means that they can go, if they seize in 2022, they can go up until, they can go up until 2017,
2017.
right? Yeah, for them to enjoy what that balancing allowance. I now said that that to me does not make any sense. And I'm very sure they understand what they're trying to say.
Mm,
That the tax of 2017, 2018, 2019, 2020 that we have filed, we are even forgotten that we filed it. We have paid the tax on it. We have
mm,
closed out on the assessment. They're now saying that we should come and be recouping the capital balancing allowance of a particular year against them. How do you want to go about that? We're already seizing business.
mm,
It does not make sense. Does it make sense to you? It does not. Because we have closed out on those tax assessments for those years. So I now said, in principle, what should actually happen is that the authority is meant to actually give or refund the taxpayer in cash for the unrecouped balancing allowance. But do they do that? No, in practice. I've not seen anybody that they did that for. But maybe, of course, a lot of companies have been carrying FRS to tax tribunal now, to TLT now. Last year, MTN carried them to court. So maybe if the balancing allowance is a lot and the company cannot forfeit it, maybe say it's running into billions or millions, and they cannot compete, maybe in that case, after the company has dragged FIRS to court, maybe FIRS will reimburse in cash. But up until now, I've sincerely not seen any example. I hope you get what I'm trying to say. So let's quickly close out on the remaining notes part. Or is there any question up until this time? Is there any question up until this time? We are going to leave the remaining um leave the remaining illustration. We are going to answer one more illustration. I share shift. We're going to answer I share shift, but it's not been this class. Time is past spent. We're going to answer I share shift for next class. But the last thing I want us to talk about is the restriction of capital allowance. We have talked about balancing allowance. We have talked about balancing charge. Now, we want to go back to capital allowance itself and the fact that capital allowance should be restricted for certain businesses. And what are those businesses? I'm going to read it out. For individuals and companies in trade other than agro, allied, and manufacturing business. I'm going to take that. For companies or taxpayers that are not in agro, allied, or manufacturing business. I'll give an example. By agro-allied business, we mean agricultural producing, you know, or agricultural any business that has to deal with the production or distribution of agricultural products. All right, or manufacturing business rather. Okay, any individual or any taxpayer that is trading other than agro-allied and manufacturing business. Let me highlight this and move on. The amount of capital allowance for these taxpayers to be deducted from the assessable profit in any year of assessment shall not exceed 66 rather 2 over 3 or 66 to third percent of such assessable profits. What this is saying is that for every business aside business that has to do with agro-allied or manufacturing, for every business aside these ones, they are not entitled to enjoy all their capital allowances for a particular year in that particular year. I'll take it again. for every business apart from these businesses that we have mentioned, agro-allied and manufacturing businesses, they are not expected, or they are not allowed rather, to enjoy the total allowance, capital allowance for a particular year in that particular year. The maximum they can enjoy is what, 66 to third, or the amount of capital allowance, pardon me, that they can enjoy is restricted to 66 to third percent of their accessible profits. Or you can simply say that 2 over 3 of the accessible profits. I'll take it again. The capital allowance that trading, so every other company that is not in agro-allied or manufacturing, we call them trading. For this purpose, we will be calling them trading businesses. For every trading businesses, for every trading business, pardon me, the capital allowance that can be enjoyed will be restricted for every particular year, will be restricted to 66 to over 3% of the accessible profits, or 2 over 3 of the accessible profits. And if I say 66 to over 3% and I say 2 over 3, it is the same thing. For instance, if we do 66 to over 3%, what you eventually arrive at will still be approximately 2 over 3. All right, will be 66 to over 3% of the accessible profits for that particular year. It now goes ahead to say that there is no restriction to the amount of capital allowance claimable by a taxpayer in manufacturing or agricultural sector. That is, 100% of the capital allowance can be recouped against the accessible profit. For those ones, they do not have any problem. If you are in manufacturing or agricultural sector, you do not have any problem. You can enjoy your 100% of your, you can enjoy the 100% of your capital allowance in a particular year against your accessible profit. But for trading businesses, you cannot. You have to be restricted. Now, the act now describes what a taxpayer in the allied industry is, because it looks vague. Manufacturing is clear. They are producing something, they are manufacturing something. But agro-allied, what do we mean agro-allied? It says that it is a person or company who establishes or manages a plantation for the production of rubber, oil palm, cocoa, coffee, tea, and similar crops. B, it says that it cultivates or produces cereal crops, tubers, fruits of all kind, cotton, beans, groundnuts, shea butter, berry seed, vegetables, pineapples, bananas, plantains, blah blah blah. Number C, establishes or manages animal husbandry, that is poultry, piggery, cattle rearing, and the like, and fish farming. Summarily, there is no restriction to the amount of capital allowance by a taxpayer in the manufacturing and agricultural sector. But for all other sectors, capital allowance shall be restricted to 66 to over 3% of the accessible profits. That says we should see illustration below. These particular illustrations we shall be treating them in the next class. For the next class, I would love us to answer this I shall shift Nigeria Limited. I shall shift Nigeria Limited. And this was what I was trying to explain the other time when someone asked if we will have to when we see a question about capital allowance, if we will have to compete for the entire year. Now you can see that we have gotten to the end of the topic. Now you can see the kind of question that we have. This question gave us the adjusted profits for how many years? For 4 years. Say we now have to compute capital allowance to be able to get our adjustable profit. We now have to compute our capital allowance separately, and they say ask us to compute for relevant years of assessment. This will be our relevant the the capital allowance for these 4 years will be the relevant years of assessment, because these are the accessible profit we are trying to arrive at. That is just by the side. So we are going to be answering I shall shift first of all in our next class. And I hope you guys will go through this note once again, go through it once again, so that we can close out on it and move to adjusted profits immediately in the next class. All right. Everything that we have been doing is to one aim, is for you to be able to assess a company's income tax or a company's income to tax appropriately. So the loss relief that we have dealt with, the basis period that we have dealt with, this capital allowance that we are dealing with, everything will culminate under company income tax. Everything will culminate under company income tax because that is where everything will now be applicable. For you to be able to like assess a company's income, you have to like understand loss relief, you have to understand your business period, your year of assessment, and all of those things. You have to understand your capital allowance because of these things are adjustments for the profits. All right. Before I go, I want to ask: is there any question? Who has any question? Do we have any question? Is there any question, please? Abiodun want to say something? There's certain people that I've no longer been seeing in this class. There's a guy, Ola. Is he Ola? Where is he? He's not. He has not been joining the class again. What happened? There are two guys that normally join the class before. I cannot find them in the class again. But do we understand? Is there any question? Please talk to me. Talk to me. We have 5 minutes more. Talk to me. Do you have any more question? Talk to me. Talk to me. Any question, please? Any question, please? Any question, please? So it means that we understand everything very well. Eh? Is that what it means? Oh yeah, now.
And so we'll go back and try all you got last night. So
Go back and do what?
I mean, at least we understood to certain extent. So we'll go back to try it again so that you'll be able to master it.
Yeah, please. That's a good response. Please go back and internalize these things. Go back and read. Please and please. Go back and read. Abiodun. Abiodun, are you there, please? Where is Abiodun? Abiodun is no longer in the class. Ah, okay. Someone should reach out to Abiodun for me and tell her to send that question she sent to me. She share it to the class. Just the question alone. Muibat,
Yes, sir.
please reach out to Abiodun for me. Tell
Okay.
her to share that particular question she shared with me. Share it on the group page as
Mm,
the assignment that I'll be expecting you guys to submit to me.
okay.
Tell her just the question. She just share the question alone, not the solution.
Okay, I will chat out that
All right.
away.
Thank you so much, everyone. Thank you for your patience. Thank you for your time. I hope you have a great weekend and a great night. Thank you. Take
You
care.
too. Thank you. Thank you.
Thank you, sir.
Yeah. Thank you. Cheers.